had your refreshments, and finally it's time for our final panel discussion, and this is a very exciting actually topic. It is open and connected banking, the future of financial innovation, and that's something that we are all willing to dwell upon. And of course, for this, I'd like to invite first and foremost our moderator for the panel, Ms. Neha Soni, a dynamic serial entrepreneur and blockchain enthusiast, founded Quorum8, a global leader in blockchain startup solutions. And as an investor and visionary, she empowers ventures across technology and real estate, fostering innovation and success worldwide. So ladies and gentlemen, put your hands together for Ms. Neha Soni. Ms. Neha Soni from Quorum8, can you please come onto the stage and take your place? Ms. Soni is going to moderate the panel, and our first guest on this panel is Mr. Anton Titov. He's an experienced CEO and startup strategist specializing in helping early stage SaaS companies achieving scalable growth. As the driving force behind Archway Finance, he's revolutionizing cross-border transactions by combining conventional financial systems with blockchain technology for faster and cost-effective solutions. Put your hands together for the very well-dressed Mr. Anton Titov. You guys can take your seats. Next up, I'd like to invite Mr. Yash Gandhi, who's a CFA, FRM, MBA. He's a strategic leader with expertise in digital transformation, fintech, and corporate development. Currently serving as Chief Corporate Development Officer at insurancemarket.ae. And anyone who's heard the radio has heard about insurancemarket.ae, that's for sure. Previously, he contributed to Policy Bazaar's $6 billion IPO and led fintech initiatives at Invest India, shaping policy and market strategies for the sector. So once again, put your hands together for Mr. Yash Gandhi. Up next, I'd like to invite Mr. Karim Zaitouni onto the stage. Mr. Karim Zaitouni is a CEO, a visionary leader with expertise in entrepreneurship, innovation, and electronic transactions. With a very strong background in technology and business management, he's poised to drive continued innovation at CISPay. So once again, not for the very first time. In fact, we met last year. Mr. Karim Zaitouni, it's good to have you once again, sir. I like you guys. You guys are still excited. I like that. Well done. Without prompting, you guys are clapping. That's a good sign. Last but not the least, I'd like to invite Amira Soliman, CEO and co-founder of Time Guardian, and has 23 plus years in retail banking, credit cards, lending, and investments. She has held key roles at Citibank, Credit Agricole, and FAB, excelling in risk management, digitalization, CRM, and sales across Middle East and Africa. That's, I think, an August panel, and it's open for discussion, so I'm going to hand it over to our moderator for this panel, Ms. Neha Soni, and we'll get your mics as well. Yeah, you can clap for the panel.
Thank you. Hello everyone, my name is Neha Soni and I'm the founder and chairman of Quorum Ventures. We are a Web3 accelerator company with expertise in technology development, marketing, and PR. We help develop amazing crypto, blockchain, and AI startups and help them with their complete go-to-market strategies. So we help these startups with also influencer marketing, creating their crypto communities, doing more lead generations for these startups, and also on board like major news media channels to cover their stories. So today I will be moderating the panel on open and connected banking, the future of financial innovation. And today we are having an amazing panelist with us. First, I will allow the introduction of each panelist by themselves, and then I will be introducing more on the topic, and then we will be hearing more about the subject from the expert themselves. So, Yash, can you please start?
Super. A very good evening to all of you, and it's truly a pleasure to be part of such a distinguished panel. So I basically am a quick introduction. I'm Chief Corporate Development Officer at insurancemarket.a. So for those who are from Dubai, I'm sure you guys are all aware of the brand. We are the same people behind Alfred, which of course you see on all the billboards across Dubai, on the radio, and of course we recently got the naming rights for the Insurance Market metro station. But yeah, I'm essentially looking at new venture development and all these strategic initiatives. Now, the idea behind open finance, right? We are at a very interesting time in the in the entire space where a lot of the regulator themselves are pushing towards adoption of central and open finance and open insurance standards, and that's where I think it's a very exciting time to be a fintech player. And but yeah, I look forward to contributing to this panel.
Okay, Mr. Karim, can we please have your introduction?
Sorry?
Can we please have your introduction?
I'm really happy to be here with you today. I came especially to participate to this great event and for other business meetings that I will have during this week. Today, I'm CEO of 3 companies, a small group of fintechs, Syspay, working with customers for payment and electronic transaction in 36 countries. Our customers are based in 36 countries in Africa. And we have also OnePay who addressing local market in Morocco, working with mass market merchants, small local businesses. We started last year and we have today 9,000 merchants using our digital solution. And we started last year with Syspay Africa Payments in Dubai to address the African global speaking English or African markets. I'm really happy to be with you here and to share with you my global experience. And thank you for your attending.
Okay, Ms. Amira.
So I will not give again an introduction about myself. I will talk about the companies which I have. So I came from background of banking as been introduced earlier. Have my first company as a fintech. It was for financial inclusion to ensure that there is a fairness and we include multiple people into the finance sector. And this is how I make our first marketplace. I've started in 2021 and exited from 8 months to the government EDQ. And then I said, what's next in order to cover the gaps and the fraction into the banking system? I said I need to go to the blockchain and AI in order to cover the gaps, whether it's data privacy or security, or whether it's payments and how to enable payments through the crypto and use the crypto as a lifestyle to pay our coffee and everything. So I've partnered with the biggest payment processor, EMI, here in the UAE in order to enable for them the POS machine to accept crypto payments, and will be launched soon. And I've partnered with the banks and insurance company in order to give them a digital vaults to store data and transmit it to their customer up to 100 years using decentralized and encrypted mechanism. So this is what I'm doing as of now.
Okay, Mr. Anton, can you please introduce?
Hi everyone, my name is Anton. I've been in venture building for the last 12 years, mostly building corporate startups and startups for investors and internal innovations for different startups, basically with challenges that was hardly solved internally. So I was always in the interim C-level positions. And in FinTech, I think for the last 7 years, and was always excited about blockchain technology as itself, but never seen a really good usage of that except for some last years, let's say. And while having a company in Switzerland, we've always been a remote team, and we had the challenges with B2B remittance, paying for the for our workers who are really in the countries that are, let's call them, emerging markets. And we've seen that blockchain can be a good solution, but without proper mediator who is based in the Europe, can connect traditional financial institutions, basically not trying like to compete with SWIFT and banks, but prolonging traditional financial institution lags. We started to build R2E Finance, and that's what we do right now, B2B remittance and neo-banking for emerging regions. And this is my core, in general, expertise at the moment.
Thank you, panelists, for the introduction. So let me highlight more about the topic, open banking and connected banking. So basically, this is the transforming the way currently financial industry is working. How this is happening, because now we see there are so many financial products which are in the market, like insurance, lending, borrowing, and these are all interconnected with each other using the APIs. So basically, we have an interconnected ecosystem of fintech companies, financial institutions, along with like multiple different startups and third-party providers. So here we will be asking our questions regarding the open insurance, which is one of the open banking product, to Mr. Yash. So can you please tell me more about what type of businesses which can be benefited from open insurance?
Thanks for the question. I think it's, as I said, it's a very exciting time to be a fintech player, especially in the insurance space, right? And I think the timing is perfect for that. Look, I think the way I see it, insurance, at least in the context of open finance, has been more like a sleepy cousin of banking, right? Where a lot of new models have come up in the banking space, and especially in countries like UK, where players like Revolut, Monzo, they've really done really well with the innovative business models. That, unfortunately, has not happened yet in insurance. But I think the time is ripe, especially with the Central Bank of UAE really pushing for the industry to adopt standards. And we, as a pioneer in digital transformation of the insurance industry in the UAE, as an insurance market, we have been working very closely with the regulators. Now, if I had to talk about the 3 pillars of open insurance, and I think I'm going to be focusing more on open insurance, giving the company that I represent. The one of the pillars is data sharing, which is sharing of data between the customer, insurance company, insurance brokers, and all the TPPs that will be out there. The second one being service initiation, which is essentially initiation of services by TPPs on the rails of open insurance that the central bank has created. And of course, the last one being code generation, which is instant generation of codes to provide the customers with a very instant quotation basis their requirements. I think there's a lot of use cases for new models to come in and solve for each of these 3 pillars. We, of course, we are targeting all 3. We are the largest insurance broker in the UAE. And a lot of use cases, a lot of new models, like, for example, embedded insurance, pay as per use insurance, micro insurance. A lot of these new players will start coming in. If I had to give an example, think of today, insurance is more like a buffet where you have to pay a certain amount, but then you obviously choose what you want to kind of eat, but you have no option but to pay the entire amount. With open finance, with open insurance, I think it's going to be more of a personalized kind of an experience which customers will have, so they can actually pay for what the actual coverage they want. And I think that's going to be a very big game changer for the industry. But yeah, I think that's something which we're all looking forward to.
Definitely. So my next question to Mr. Kareem, can you tell me a difference between open and connected banking with some examples?
Okay. The open banking is when some banks open their platform to third-party partners, and these third-party partners act like aggregator to provide to the final user, after his consentment, to use, to be connected to all his accounts at the same time. For example, today, if you are in HBC, you have to be connected to your bank to perform some operations. And if you have Bank of Africa, you have to be connected also to this one to do the same operations. Open banking is something that regulators want to open to the fintechs this platform, and you will connect once to this platform, and you have at the same time your 4 accounts in the 4 banks, and perform all the operation you want to do, investment, asking for loan, etc. The connected banking is something different. Like Revolut, for example, they started with currency exchange, and after that, after they have today, Revolut have 55 million users. They are in 38 countries. They have made almost $2 billion more than 2 billions incomes with 400 or 450 million dollars as margin. They have enough customers to provide them also with services, with banking services. I will give another example that will be more easy for you. It's like Uber. You use Uber and you can pay your taxi by card, but also you can do it by cash. So when Uber propose to you to pay by cards and propose to you also other services linked to the bank, this is the connected banking. I can, of course, I have an idea about, in my opinion, how it could be the future and how it is, and what are the benefits for all the fintechs existing now are willing to go to open banking or to connected banking. But maybe I will, if I have another chance to explain it, I will do it after letting my colleagues also to give their insights. Thank you.
Thank you, Karim. Of course, next time we will definitely have more explanation on the same. My next question is with Ms. Almira. So what do you think are the benefits for cross-border transactions, especially related to open banking?
When you talk about open banking, it's seems like he mentioned clearly that you will have the access, the customer will have one wallet, and this wallet will have all their accounts, whether it's FAB, HSBC, Emirates, MBD, all will be available in one wallet, and they will be able to transact from each one through separate accounts. So here, what is the benefit in it in order to do cross borders? You will have one view for all your financials, 360 views. So you will be able to know what you have and immediately do the transfer. But it will not eliminate the timing of the transfer. So it will not make your transfer as instant, as an example, unless you have a solution for instant transfer. So it is not impacting this, but you will have a full one view for what you have, and accordingly you can invest, you can do the transfers, you can do whatever you want. But how it's impacting the cross borders, if you are using the SWIFT, you will use the SWIFT, which is normal and it's very high cost. If you are having your partnership with the banks and your partners, same like EMQs or MoneyGrams or whatever you are using, you will be using them, and accordingly you will do the transfer. So it's based what you will be using. This is what will impact the cross. If you will use the blockchain, which is the best as of now and much more cheaper, this is the way forward, and this is how we should think. So I don't mean that the SWIFT and the normal correspondent banking is an old school, but if we want to see the differences really into the cross-border payments, it's about the blockchain and the use of the blockchain, because it's much more cheaper. As of now, we are paying from 3 to 5% to do one payment for cross-border payments. But if you go for the blockchain, it's about 0.6. If you want it to be instant, an instant transfer, it doesn't take 2 or 3 days, seem like. And when we are saying it's happening immediately, it takes at least 24 hours. And if it's during the weekend, again, it will not happen. So the blockchain is the differentiator into the cross-border, and not the open banking that much.
Yeah, rightly said. Okay, so my next question to Mr. Anton. What are the emerging underserved market right now, and what innovation can actually shift, which will implement the same type of technology which is already being implemented in the Western world to these underserved regions?
Okay, so I think we slowly actually get to this topic because I've spent half of my life in Russia, I've spent half of my life in Europe. I really like innovations that are happening in Europe in terms of fintech. For example, Revolut was already touched there, but I think there are a lot of innovations that are happening just for the sake of innovations. Basically, hey, we're gonna make, instead of minutes, your transaction is gonna take seconds. Instead of $1, you're gonna pay 90 cents. And such types of things are good because market is in general like pretty huge, but there is a lot of markets that are struggling where the same payments take weeks. Sometimes they get returned because they not found like the beneficiary, and 3 and 5% is a pretty humble perception of how much some cross-border transaction cost, because in Pakistan, in terms of B2B remittance, companies sometimes pay up to 15%, and they would be happy to get this payment at all. And if we'll speak about those markets, it would be like in APAC, still India, Pakistan, Bangladesh, in Africa, you can name ton of them. In Latam, it also would be the same situation. And in terms of like technologies, I think again back to the blockchain, and I like this question on the previous panel, what is bigger innovation, stablecoins or blockchain? I think it's both, because at the end, like, till CBDCs will take over the markets and would be some way inter-exchangeable. Stablecoins like USDC will rule the market, just because this is something like accepted by most of the companies or businesses around the globe. And taking back this to the topic, open and connecting banking, this is only possible with the existence of such open platforms where API gives the access. Because, for example, R3 Finance as some way of intermediary exactly is able to connect to Bridge XYZ. This is a company that was recently acquired by Stripe for 1 billion. And this is the way how we're able to provide Indian citizens or Indian freelancers USD named account on the local rails. And there is, like, it is impossible 2 or 3 years ago to achieve the same thing. And only with open banking and the new risk perspectives of those financial institutions, we can provide really changing innovations to those markets that are striving for growth. And the payment rails is like something inevitable that should be delivered there. Otherwise, it's impossible. I was on the previous conversation, I was giving an example. It's like giving an education to a child, but never giving him a chance to be hired. So yes, we invest a ton of money into those markets so they can develop, but we are not providing them payment rails, and it's where things get corrupted.
Okay, nice. My next question is again to the insurance expert. What do you think, how customers will be benefited from open insurance?
Thanks. I think the customer experience is going to be throughout the entire insurance life cycle, not just limited to quotation, because there's going to be instant quotes, of course. Underwriting ease and swiftness of underwriting is going to be a key benefit, as well as claims, of course. And I'll dive deeper into each of these aspects. So I think the best way to kind of illustrate this is more, how it would work in the real world today, right? So today, as a car owner, I have to go on an insurer's website, or let's say, a broker's website, and essentially feed in my personal details manually. I have to put in my car make, model, variant, my chassis number, my previous claims history, my previous insurer. All of that can actually just be done at the click of a button, right? Let's say if we're already connected to open insurance data through the infrastructure, all I have to do is put my Emirates ID and all of my personal data, my previous insurance policies, my other data that are required from my RTA data, my vehicle data, can automatically be pre-populated. And I think that's something which is beautiful, right? The simplicity with which it brings to the entire journey is, I think, going to be immense. From an underwriting perspective, let's say a medical insurance for that matter, it's a very comprehensive medical application form that today we have to fill in. While a lot of that will still be required, I think most of it can directly flow in terms of your previous medical history, your diagnosis that you've got earlier. And I think that's going to simplify the entire underwriting process and quicken. And mainly, I think the underwriting aspect leads to a lot of delays today from the insurer's perspective. And I think that's what is going to get solved. Instant underwriting, instant issuances are going to be key. And the third, of course, the claims piece, which is always a big blocker for most insurance customers. Because when it comes to selling, it's so easy, but when it comes to actually getting claim support, it's always a struggle. And with open insurance, with open finance, I think all of that data can directly flow in from the relevant parties. So that's going to be a clear benefit. I think at the end of the day, what's going to happen is brokers, and I can speak as a broker, of course, brokers will stop competing on price, and they'll start competing more on service levels. And that's, I think, going to be an overall benefit which all customers are going to get. And we, as I mentioned at Insurance Market, we were born in 2010 with the primary aim of digitizing the entire insurance sector. And we've been working very closely with insurance companies to kind of build those APIs. And this is just going to increase and expedite the entire process for us to go digital. That's why.
And would you like to also highlight some of your customers?
Yeah, absolutely. I think we have around 200,000 customers today which are active, and while we have always had a very customer-centric view, a lot of the overall industry don't really have that, and I think that's something which is what's going to make the entire industry kind of come up to a certain bar, which is going to be beneficial for all of us. So yeah.
Oh, that's amazing. That's quite a number. Okay, my next question to Mr. Karim. So what are the key benefits of open banking, and how can it be better in future?
For the open banking, the main benefits are especially for the users. They can have one view, they can operate a lot of operations. They can also asking for example, for loans, and allow the banks to give competitive offers to them. They can also make some investments directly in one view, handling all their money in one step. The open banking, I think that the future of the open banking is the connected banking. The connected banking, when you see, for example, WeChat that have everything, and today they created services linked to the bank and allow their users to make operations directly with the bank. This is something amazing. The same thing has been made by Strip. Strip was just a payments processor at the beginning, allowing merchants to get their money from e-commerce. But now they add a new business that allow merchants to make directly operations on their banking account directly, not only with cards, not only with wallet for payments, but acting directly on the banks. For example, our company OnePay, we provided at the beginning for merchants digital wallets, allowing them to manage their shops without any financial transaction. Today, we are connecting this wallet to the banks to allowing small merchants asking for loan or asking for funds, asking for investors. This is what we are doing. I think that the future will be invisible connected banking. What does it mean? I think that tomorrow you will have, for example, an Amazon application, and with Amazon you can buy everything and do a lot of things. And by the way, using your account and having also some packages that will help you to managing more efficiently your banking accounts. I think that's the future will be one super Revolut company that will invisible all these transactions. When you see Revolut today with their catalog of products, they are really huge, and they are changing the world. They had Revolut last year obtained 2 banking license. They not will acting like a processor or like provider. By today, they can act also as a bank. And this reality will change things with the AI that will optimize and allow things going faster. I think this is the targets that we have. When you see that Revolut, for example, have been evaluated last year to 45 billions, and they becoming one of the big fintech of this world, I think that we'll have a battle between Revolut and other actors that will make this transaction invisible and easy for the final customer. The benefits for fintechs, it's that they will open for them new markets. And with partnership with these big actors, I think that we can have some opportunities to handle. This is not, we should not be scared about that. We should be positive about that and searching opportunity to be connected to these big actors. For the users, of course, the users will have more chance to have competitive prices, competitive offers, and especially easy use of financial application. And the big benefits is to include the people that not have access to banks to allow the financial inclusion. Thank you for for listening to me and
Okay, Ms. Samira. So what are the technologies which can enhance the open banking adoption?
As of now, we have there is a multiple open banking. Actually, it's been used since the Ittihad Bureau have been launched, and they start sharing the information, being mandated to share all the information of the customers, whether it's assets or liabilities, in order to give a proper credit score for him and give him the proper lending facilities. So this is one of the things which have been implemented since 5 years back into the full banking system, and anyone who's doing lending, they must follow the same. So this is a kind of open banking, but then the fintech comes in, same like lean, and they start opening the open banking for us. So through an API, you can integrate with lean in order to get the full 360 view of the customer, what accounts he has, what is the available balances, and accordingly will be able to proceed with his transaction. So multiple solutions is available now in order to support the open banking, and multiple tech is working into the same. But the most important thing that how we will be using this information. So how we will utilize the open banking. This is the most important thing. So in the corporate side or into the banking system, it's very, very important that when we go to the customer now, you will be able to offer him the proper product which is catered to his own needs, because you have a 360 view of what he has. So you will be able to buy him out if you want to get him from another bank and get him to your portfolio. You will be able to target him for the proper investment to suit his need, because when you go, you already know the 360 view for the customer. And from the customer aspect, he's getting the best technology in his hands. He has all the information about what's available into the market. He has all the rates, and he can pick and choose the best for him. So the transparency and the clarity for the customer and from the corporate, the most important thing, how it will be used and implemented. So it's both ways, from customer and from banking and fintech. It's very useful for them to use the open banking, and technology is available in multiple places and offered very well now, here especially in this market.
Thank you. My next question to Mr. Anton. So, like these days, we see there are so many stable coins coming into the market, and new blockchain technology is also getting more advanced. So, what do you think, can underserved market be benefited with these technologies?
I think if you think about like stable coins, at the end there is right now few big issuers, Circle, Tether. At the end, most of those technologies are still used as API based. So we are kind of speaking about open banking at the end, even if those organizations are not officially licensed as banks, they issue in digital money. And stable coins, from my perspective, main change that they give us, especially in those emerging markets, is accessibility of financial services comparing to Western markets, just because regulation is not clear yet. MiCA comes out in Europe this year, US regulation with Trump is going to be changed, etc. And right now still a lot of governments fighting with what's going to happen with CBDCs and how it's going to be regulated. What is more important, we as a company, we don't have a banking license, we have a VASP license, which is Virtual Asset Service Provider license. The same licenses are used by Bybit, Coinbase, and many other cryptocurrency exchanges. It allows them to service 180 markets on average globally, except of the most sanctioned ones like Somalia, North Korea, etc. And it gives also us a capability to serve the markets that are underserved by traditional fiat rails. Basically where, again, speaking about like Bolivia, Argentina, any of those countries, you can have a citizen USD account, you can have Euro account, you can have GBP account, you can have a saving account, into those Western currencies be basically protected from inflation and high capital controls, etc. But with stable coins, we give those people those capabilities. And I think we have right now a window in terms of regulation, like 3, 7, maybe 10 years before things gonna be like fully infused, where those markets can be exactly like connected to the global economy through a bit unstable solution, but based on the stable coins in some way. And they can have this possibility basically to prosper much more, otherwise they're staying detached. And that's the main like innovation purpose of stablecoins from my perspective right now in those markets.
Thank you everyone for sharing your expert opinions. Before we conclude our panel, do we have any questions from the audience? Especially to who exactly you need to define.
Anthony, as far as cross-border transaction is concerned, there are a company called Remitly who quickly transact within a second with no upfront charge. As a beneficiary, I've seen that, somewhere $5,000. So can we give me some insight? Why can't this bank and other fintech bank can adopt this formula as a win-win scenario? This is my question.
Can you please repeat the last part of the question?
Company called Fintech, Remitly.
I know Remitly.
Yeah, it's a cross-border transaction company, and they do recently one transaction, beneficiary myself they quickly transfer in within a second with a no cut and no fee. So
Yes.
my question comes in, why can't these big banks and other fintech can adopt a similar user-friendly product?
Okay, I see your question. So in terms of banks are usually working on SWIFT. It is pretty well priced system. Main challenge with that it always takes days, especially if there is correspondent banking systems. If you will think about like Wise, which is similar to Remitly, etc., all of them are using the system when they have a banking account in Europe where the payment is accepted, and then the banking account where payment is remitted. And they always have an incoming payments and outgoing payments. So they do only the clearance within a day or weekly basis. What is the difference between the volumes that have been transacted? When we are speaking about cryptocurrencies or stablecoin remittance, we move real money. So it means that euro or GBP that has been remitted, they become stablecoins, and when they come to India, they become Indian rupiah. That's what happened. That's real money movement. Especially it is interesting again on those emerging markets because stablecoins usually cost more than traditional dollar. So in India, classical exchange rate for the dollar would be 84 INR, and for the USDT, it would be 88, 89. So it means whenever you bring USDT to India, you can cover all the fees, exactly what Remitly do. I'm not sure which system Remitly use, and I've heard about like offers where it's 0 fees, but usually it's just acquisition program. Hey, come to us, we will get your payments free, but it's only like first 3 times, 2 times, etc., and it's always get paid. With stablecoins, it's a bit different, but again, this situation in the market gonna last for only like next 5 years or so. So banks in general can hardly accept that just because their rails are different, and whenever they will try to get into crypto licenses, this will shake a lot of their partnerships and will shake out all their compliance divisions. That's not a way to go.
One last question, yeah?
This is to anybody in the panel who would like to take it up. I come from traditional banking, okay? I'm finding it very difficult to envisage a scenario where you have a super app, where you have customers on it who are being given all the benefits, the best benefits that each bank can provide, okay? You cannot have competition in the banks because everything will go to the lowest cost provider or the best provider of loan services or deposit services. This will require huge consolidation in the financial services, the banking markets. I'm just having a challenge in understanding this. So anybody who can try and explain how the two systems will coexist.
From my perspective as mediator who is able to connect more services, first of all, I have a broader choice. If bank is like capable to develop only own system and they wouldn't go to this bank behind the corner because they're competitors, I might choose between two of them if they provide open banking services. Second thing, and those, if we're speaking about those emerging markets, especially as colleague had here like a dedicated session about credits and loans in Africa, all of those markets are underserved hugely. So even if you don't provide the best service on the European market, but you will take average one from the European or Western market and bring it to emerging market, it would be breakthrough. And that's like, for me, it's not about like trying to overcome the bank where everything is established. It's really to bring the services that are inaccessible somewhere. So it's not the fight. It's really truly like the prolongation of the access.
Yeah, so, just to complete with what you're saying, so underserved, well understood, services not available in a particular market but available elsewhere, also understood. But this requires cross-border, and this requires complementarity and frictionless cross-border, and it requires countries to be open to use their currency, and over time this requires a dominant currency, which could well be a crypto or a blockchain, right? It's just the amount of change that is going to happen is so large that the traditional banks are not going to give in straight away.
I might add to that that it is already happening. So for example, like in India, there is a lot of banks who are able to pay out INR if there is an institution before who did an AML KYC check and accepting those stable coins. So that's what we do in India. It's already happening. It's a bit undergrounded. It's not so well noticed. It's also not yet regulated, but it is already happening. And as all discussions here was happening today, crypto and Web3 is just on the path to be properly regulated till it will become infused in all matters. And it's just right now not yet unseen.
Not only this, actually we've closed EMI, which is one of the biggest in the UAE and Bahrain, and we're gonna enable for them the crypto payments through their POS machines, which will facilitate for the customer to start buying directly through the crypto and stable coins their needs, whether it's grocery, coffee, whatever. So this is happening actually, and especially in the GCC, they are focusing into this by having the VARA, and central bank next week will come with a new as well regulation for the crypto coins, so it's happening.
I will just add something just before. There is something very important here, that banks have to move forward. If they stay with this lobbying, saying we cannot do that, we will not be open, someone will come and do it. For example, Flutterwave in Nigeria, coming to some countries in North Africa, discussed with some banks, these banks said no. But in other countries like Egypt, like South Africa, they started to work, and today they are in 40 countries making connections between banks from this country to this country. And Flutterwave have raised last year more than $170 million to allow them to advance in their strategy. Banks need to see that not like a risk to be open to the fintechs, but like an opportunity to diversify their product and their catalog with using the energy of the others. This is a strategic way to work, and I think that each bank should have this strategic acts well reinforced. Thanks.
Thank you everyone for joining us, and looks like this is the longest panel. Our time is up, maybe since forever. Thank you guys.